Hi, I'm Scott Shellady here, and the Seymour Group floor is in Chicago on, let's see, well, it won't, it's the last Friday in February, I guess. Next week will be March 1st on Friday, but lots happening, and what I like to do at Traders Exclusive is talk about what everybody's been asking me to talk about. And I think obviously the biggest one out there is still this China deal. The Chinese are in town, or at least in Washington today. The markets are looking a little bit more buoyant on the fact that we might see some sort of putting off of the March 1st deadline, maybe 60 days. There's been a few numbers bandied about, but look, we're going to get a deal done. And I'm not really as excited about getting a deal done as seeing what Donald Trump would say would be maybe his legacy here. He's trying to disrupt the way that we've traded with the Chinese for the last 30 or 40 years, but also how the world has been trading with the Chinese for the last 30 years. And here's what I think is the big rub, right? Oh, we all talk about what the market might do when we get some sort of deal or an announcement of a deal. Yeah, maybe it goes up, maybe it doesn't, maybe we saw the fact on that. But that's really not what I'm really interested in. I'm really interested to see how the economies around the world benefit from more free trade with China. It's a huge trading bloc, obviously, and see what that does to the wealth of average everyday people, because I think the real big story is not the move the market's going to do right after a deal is announced. I think it's going to be a lot longer of viewing that deal and seeing how that's going to affect our markets and the central banks around the world, because I think that's going to be the real positive there. Trading freely with China around the world, not just from the U.S. Also, interest rates, still that 10-year between 260 and 270. I think the upper range right about now, 267, 268. What do I think about that? Well, you know what? Last time we saw the equities around this level, we were approaching a 3.2% 10-year yield, and we were talking about 4%. And by the way, we're talking about oil at, say, $100. And I think that the last 6 weeks of last year, of 2018, were largely kicked off by the fact that a lot of the traders around the world and investors around the world got those two big trades wrong, real wrong, right? They got oil wrong because it went from 70 to, say, the mid-40s, and we got the 10-year wrong because that yield went from 320 to 260. So those two trades were what really sparked most of the move, I believe, in the equities towards the end of last year. And oil and the equities did trade a lot together in the last 6 weeks. But everybody began to sell everything because they got those two trades wrong, and it kind of was a self-fulfilling prophecy where people cannibalized themselves on the way out of those trades. But that was a big deal. Now we've got things settling down a little bit, but the 10-year's at 267, 268. We've got oil between 55 and 60 bucks a barrel. It looks like it wants to squeeze up to that level and get that print. But we have seen the equities retrace, right? So again, the last time we were around these levels in the equity market, we were seeing a 3.2 or close to a 3.2% 10-year. And it just is nice to see those interest rates back off a little bit here and maybe give these equity markets a little bit of a more solid footing. Because I think that, you know, we could talk ourselves into a recession here. It seems like the talking heads have been doing that. You know, we're in the 10th inning of this long bull run, or there's, you know, we're in overtime. All these things about, hey, we can't have it this good for that long. You know what? The world has changed. Quantitative easing kind of has rocked the world. Since quantitative easing was introduced, I think there are no more rules, and we have to kind of create a new path and chart a new course, because who knows what's around the corner. But it's just nice, from my point of view, to see these equities rebound a little bit while we've got these oil prices and the 10-year yield at a little bit of a lower level. So those are the overarching things that I guess most folks have been talking about. There's some smaller stories out there, but we're going to have to wait and see. China is really probably the biggest, and how that affects the market going forward. Keep an eye on oil, and maybe gold is getting a little bit interesting here, but I think we've probably all, that horse is kind of bolted from the barn. That's it for me. That's a lot to talk about. I'm glad I'm back to see you. I haven't been back on a lot lately, but it's good to be home in Chicago. I'm Scott Shellady for Traders Exclusive here in Chicago. Have a good Friday.